Kimbo Widgets Inc. purchased new cloaking machinery 3 years ago for $7 million. The machinery can be sold to the Rimatons today for $4.9 million. Kimbo's current statement of financial position shows net fixed assets of $3.7 million, current liabilities of $1.1 million, and net working capital of $380,000. If all the current assets were liquidated today, the company would receive $1.6 million cash. What is the book value of Kimbo's assets today? What is the market value? So what we need to do is we need to determine book value and market value. The difference between these, value. The difference between these is the book is what is shown in the accounting records. The market is what it's actually worth. What someone in the market's willing to pay for it. So let's start with the book side for the equipment. So $7 million for machinery, and then it can be sold for $4.9 million today. But on the books, we have to consider the depreciation. So they gave a net fixed asset of $3.7 million. To get our net fixed asset, we would take our purchase price, $7 million, less our depreciation, which is not shown here, which brings us to our net fixed asset. So we are not going to use the purchase price, we're going to use the net fixed asset because our book has got depreciation. That is for $3,700,000. Now, the market value for the equipment is $4,900,000. We have current liabilities of $1.1 million and net working capital of $380,000. If all the current assets were liquidated today, the company would receive $1.6 million in cash. What is the book value of Kimbo's assets today? What is the market value? So, if we were to liquidate everything in $1.6 million, so net working capital. How do we get our net working capital? Same thing as we did in the first example. It's our current assets minus our current liabilities. Our current assets we don't have, but we have our current liabilities. So we know that our current assets minus our current liabilities equals our net working capital. And our current assets we don't have, but we do have $1.1 million. And we do have our net working capital, $380,000. And so we can assume, well, we know that this is $1,480,000. Right, $1,480,000 minus $1.1 million equals $380,000. So if we were to take our net working capital, so we can either take our current liabilities are going to be the same on both sides, because if we owe the money, we owe the money. Right? If we have accounts payable, we have loans, interest, whatever it might be, we owe that money. So we can either take our current asset of current assets of $1,480,000 and less this, which we'll go ahead and do, or we could just take the net working capital and then also do a net working capital calculation with the market value. Both will be the same. So current assets, current liability, $1,480,000, $1 million. Liability means we're going to reduce it. And our book value is $5 million. Sorry, the question is, what is the book value of Kimbo's assets? So my mistake, we're not going to include this. And so now we get 5,180,000. Not the book value of the total company, it's just the assets. So that's where we made that mistake. Okay, so on the market value, we had 4.9 million for equipment. And then for current assets, we had 1.6 million. So we get a market value of 6,500,000. So you can see that despite the balance sheet showing that the assets are worth just short of 5.2 million, the market would actually pay 6.5 million for these.